Friday, May 24th, 2019, Maneco 64, home of alternative economics and contrarian views. So Billy is back this morning. I've been leaving him upstairs because he's been asleep, but I woke him up this morning. For the new viewers who haven't seen Billy yet, he's a big part of the channel. Anyway, this morning I want to talk about the moment I realized that our monetary system was screwed up, and it still is. It was back in 2003, 2004. It was kind of my eureka moment, and I want to also recommend a really good book to all the new subscribers, new viewers. I have recommended this in the past, and I will keep recommending it in the future. It's called What Has Government Done to Our Money by Murray Rothbard. And I'll go over it a little bit later on. And I will also touch upon some quotes by some famous people like Henry Ford and J.P. Morgan about the monetary system. Before that, of course, I'm going to look at where the markets are this morning. It's just before 7:15 a.m. London time. Yesterday, of course, was another red day for the stock market, albeit we did see a rally in the last hour or so. The Dow was down, I think, over 400 points, maybe 500 points at one point, and it finished down 286, which isn't great, but it did recover quite a bit. The low was 25,328. We finished at 25,490. S&P as well got down to almost 2,800. The low was 2,805 and managed to finish at 2,822. So yeah, the markets finished, the major indices finished over 1% lower. NASDAQ 1.6%. So right now we've got spot gold 1284, up about $1. Gold, of course, and silver all did quite well. They were up just, well, gold about 1%, silver just a little over 1%. So it was a bit of a change this week because we'd seen gold pretty much stuck in a tight range. It was good to see the precious metals go a bit higher. Silver right now is down 2.5 cents at 14.56. The stock market is a little higher right now. Do I think this is it? The stock market has bottomed in the short term? Maybe we have bottomed in the short term. Longer term, to me, the charts still look quite negative. Right now, the Dow future is up 57, or just under 0.25% at 25,540. S&P up 6 points at 28,2750, up 0.2%. And the NASDAQ 100 futures up 22, or 1/3% at 73.29. The dollar, or the currencies, the foreign exchange quotes here, the pound is up about 0.15% at 126.76. Euro is up also 0.15 at just under 112. And I noticed the dollar dropped quite sharply yesterday against the yen. It has recovered a little bit, but it's still below 110 right now. It's at 109.55, which is unchanged. Dollar also dropped against the Chinese yuan. It's now back below 693 at 692.47. Crude oil had a huge down day yesterday. Broke below 60 WTI. Right now it's at 58.50, up 66 cents, or up 1.1%. Brent 67.53, up 80 cents, or 1.2%. I saw a headline about oil, and some people still think there's still a lot of volatility left in the market. But anyway, another major move yesterday, aside from the stock market, was in the bond market. For those of you who don't know, I worked in the City of London for over 20 years as a futures and options broker for institutional clients. Institutional clients means big, people like banks, fund managers, corporate treasurers, and the major the core business I was involved in was the bond market. So I know a thing or two about it. I don't want to brag, but that was my specialty in the futures market. So yesterday is a huge down day in terms of yield, and it was huge because the 10-year yield dropped like about 8 basis points, which is, believe me, is quite big. So prices rose, and we saw the 10-year yield below 230, and right now we're back up a little bit. The 10-year yield is up 2.8 basis points overnight. It's at 232, 2.324, as you can see here. But as you can see, the 1-month T-bill yield is at 236.50. So the curve is inverted right there. Why is that important? Well, historically, an inverted yield curve has meant that the investors, bond investors, are signaling a slowdown or something even worse in the economy, a recession. So that's why it was significant. So my eureka moment, well, that was back in around 2003 and 4 when I was still working in the city. I'd gone out to get some lunch. I was walking back, putting some money in my pocket or in my wallet, and then I just took out a 20-pound note, and I read what was actually said on that note, and it says below, Bank of England, it says, "I promise to pay the bearer on demand the sum of 20 pounds. You can see it right here, and they still have the promise here. And that's on all the banknotes, Bank of England notes. And I thought to myself, yeah, if you go to the Bank of England and take that note, they just give you a new one. That's what they say now, that this just means that if this gets damaged, they always give you a new one. So why don't they write that? Well, because it's hidden in plain sight, the fraudulent nature of the note, because up until 1914, what this meant was that you could take this note to any bank, actually, not just the Bank of England, but all banks in the UK, and get gold for it. So you could get 20 sovereigns, which legally is still £1. You could get 20 of these for that. And at the time, I just started buying gold back in 2002. And that's the other interesting thing about buying gold, is that it led me to look into gold and what it really, how it was part of the monetary system, and the history of money. And yeah, and that's why it was such a, a great exercise, and it still is for me. When I bought gold, the first coins I bought were some Krugerrands, and I'm not really sure why I bought them. It was just after the .com bust. Maybe my wife and I were talking. Maybe we decided why not try buy some gold. And I went to a jeweler actually in the city of London that used to deal in coins, and bought Krugerrands. And it was the first time I held a gold coin. It was amazing. Unless you do that, you will never, realize how, you don't want to get rid of it. And that's why it's easier to save in gold, I would say, in real money, than, what we call today money, which isn't really money. If you think you got money in the bank, you got to think twice. What you have in the bank now is you've lent, like your, how can I say, you've lent your efforts to the bank. You've made a loan to them, and it's not guaranteed that they will pay you back, and they will never pay you back in money. And that's what I'm trying to say here. So unless you have also some silver, which is money, or gold, you actually don't have any money. And I think when the system implodes, and it will, because this bubble we're under since 2009 is the biggest credit bubble ever in recorded history. I think a lot of people who think they have a lot of wealth, especially based on financial assets, or even on valuations of real estate or property, they're going to find out that they aren't. as wealthy as they think. Does that mean I think people should get rid of real estate or the houses they live in? No, but just don't think that if you live in West London or in Central London and your house is worth 3 million, don't think that you're worth 3 million, in my opinion. Be careful. So yeah, that was my eureka moment. I realized that the system was not, there was something wrong with the system. And I realized as well that this is just like a promissory note, of course, and it's backed by the national debt, the government debt. And that's the reason why as well, when people say, oh, we need to pay off the national debt, we need to stop the budget deficits, which build into the national debt. In this system, it's impossible, because if you do that, you eliminate all the credit in the system, which makes the economy function. Am I saying I approve of this system? No. We have to, under a gold standard, a system that we had before 1914 in the UK, of course there is credit, but there's an anchor to it, because the anchor of gold and silver, because you can't abuse that credit, because eventually you have to pay, pay back that loan in real money. So if you inflate the system too much, you won't be able to pay people back. But right now the system is so corrupt that you never pay things back in real terms, or you never like extinguish debts. The only way to extinguish debt is through exchanging the debt promise for money, like gold and silver. So what about What Has Government Done to Our Money by Murray Rothbard? Yeah, I highly recommend this book. He explains in layman's term what has happened to money and how money evolved through the ages. He uses the regression theory analysis that the Austrian school economists like using. Basically, that's going back to see how things evolved and, to explain what they really are. One of the most interesting things of this book, and I'll just go through it, is he talks about how things evolved through barter, right? People exchanging value for value, which is direct exchange, right? I've produced some shoes. I've made shoes. I'm a shoemaker, and I need some wheat. So I meet a farmer who needs shoes. So we exchange shoe for wheat. But when society or the economy becomes more complex, people specialize more, it's very difficult to barter. You need indirect exchange. And that's what money is. It's the most marketable commodity. And historically, there have been many things that have been money. But through the ages, and even today, if you look at central banks, what do they hold? Gold as monetary reserves. So gold and silver became most marketable commodities, which means basically that they're commodities that everyone else wants, and it facilitates indirect exchange. That's the biggest lesson, I think, of this book. What about the famous quote to finish off here? Well, one of my favorites is Henry Ford. He says, "It is well enough that people of the nation do not understand our banking and monetary system. For if they did, I believe there would be a revolution before tomorrow morning." There's another one he says that's quite interesting, I just seen. It's this one. "It is regrettable that people think about our monetary system and of our economic structure only in times of depression." And what about the J.P. Morgan quote? Well, it's the really famous quote that was in when he testified in front of Congress in 1912 at the Peugeot hearings. Someone asked him what gold was. He said, "Gold is money, everything else is credit." So he knew about this, didn't he, J.P. Morgan? So, yeah, we can call what we use today to pay for things money, but actually it's not. It's just a promissory note. So technically, we haven't paid for anything in ages, really. We haven't extinguished debt forever. And that's why the system has grown, you know, the debt has grown so much. And that's why it's become, you know, insurmountable debt that will never be paid. And that's why you need to have the protection of real money, i.e. physical gold and silver. If you enjoyed this video, make sure you hit the like button. Subscribe to the channel if you haven't yet. Share this video far and wide if you think other people would enjoy this kind of content. And you can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.